Hey guys, today's video will be on what is a Roth IRA and how I would invest inside of a Roth IRA. So firstly, a Roth IRA is an individual retirement account that lets you invest money for retirement with a big tax advantage. Again, this is a tax deferred account. You contribute money that you've already paid your taxes on. Your investments grow tax-free after that withdrawal period of 59 and a half. And again, qualified withdrawals in retirement are 100% tax-free. No dividend tax, no capital gains tax. You can open one just like a standard taxable brokerage account through whatever brokerage you use, such as Fidelity, Schwab, Vanguard, etc. And the key point here is if you start early, you can reach potential decades of tax-free compounding and can turn relatively small contributions into a large retirement balance, which you can pay yourself out of. Now, the rules with this are that fees happen if you withdraw before 59 and a half, depending on the circumstance. I think if you go and decide to try to buy a house, different things will happen with that. It just depends on what you use the money on. Again, you should consult someone who knows more in depth about that. And earnings are tax-free after age 59 and a half if the account has been open for more than 5 years. So again, you want to open a Roth IRA for more than 5 years to really get that peak contribution. And then the annual contribution limit is up to $7,000 per year. It recently got changed, and it can be subject to change based on the economy. And then after age 50, you have something called a catch-up period. So you get to contribute $8,000 until 59 and a half. Now, income limits can apply. Again, higher earners can be restricted. Single filers less than $153,000 can make a full contribution, and joint filers, again, people who are married, can have to make less than $242,000 to fully contribute. And then it's a little line between. You can make partial contributions, but again, the goal with a Roth IRA is to fully fund it every year so you can reach potential decades of tax-free compounding. Again, with investments, you want that compound interest with whatever you invest into, even if you just stick to a standard S&P 500 index fund or any sort of fund that invests your money for you. That would still be great because you don't get taxed on your returns. So lastly, this is how I would invest inside of a Roth IRA. Many people choose to just stick to one investment, and that's normally any sort of index fund, but I kind of have that as the core position of my portfolio. And then I have stocks, satellite stocks that rotate around it. As you see here, the FXAIX, Fidelity 500, which is similar to VOO, and just that this has a lower expense ratio, but VOO is an ETF, so it has better liquidity, but I wouldn't see myself selling out. Now, in potential bull runs, I would switch over to Fidelity Large Cap Growth Fund, which has a higher upside, but a little more downside risk. Again, that deviation, it deviates a little more than the standard index fund because this is a growth fund, but both of them do kind of achieve the same thing. Again, this is the growth fund, the Large Cap Growth Fund is at a 18% annual return, and the index fund is sort of like at a 14%. So that's 50% of my portfolio. And then we have next Amazon with their AWS system and their growing e-commerce and their entertainment business with Amazon Prime. I see that this is a great company for the future. Their stock price has gone flat, but their financials are doing great. They're in a great position. I believe this company will continue to grow. Then we have Google, of course, Alphabet, one of the greatest companies there is. They've had a great run-up. I believe in the future they will continue being that cloud computing group, that AI with their Gemini models, infotech, and then their YouTube ad revenue is crazy. So I'd allocate 15% of my portfolio to that. And then lastly, we have a little bit of a doozy. We have Caterpillar Inc. Not many people look into Caterpillar Inc., but they are really important because of their construction, resources, energy, and their industrials. Now, this could be traded with another stock, such as Microsoft or Constellation. Again, I'm still looking into all the nitty-gritty with that, but I do believe Caterpillar will be an important company in the future and will be a great way for me to grow my investments through my Roth IRA. Now, that's all for today's video. Again, a short video just showcasing my investments and explaining to you what a Roth IRA is in simple terms.